Alrighty, guys, welcome to tonight's charting session. Hopefully, everybody is doing well. It is Thursday, October 5th. Hopefully, everybody's been having a good day. So, tonight we're going to be going over the trades that we ended up taking today. My bias going into the morning. We're kind of going to review the price action throughout the day, talk about, what do we do right, what we do wrong, anything that we didn't see, maybe a possible setup that we could have taken that we, didn't see, or anything that we should have done differently. And then we'll talk about what we're looking at going into Friday. So I won't be trading tomorrow just because it's the end of the week for NFP. But we will talk about what I would be expecting to see tomorrow, or what my bias would be tomorrow. And then we'll get ready for next week as well, talk about the news and stuff like that. So jumping in already, I do want to erase the charts here and talk about my bias going into the morning. So looking at morning, this, in my opinion, was the best setup in that was available today and that we ended up taking. I entered pre-market for this trade, so there was two entries to this. Let's talk about it. Going into the morning, right, we had buy-side swept on the 15-minute. We had nice displacement to the downside. Zooming in on the 5-minute, we had a clear sell side being the draw on liquidity. This is where I was looking for price to go. And we had also sell side down here. This is where I was looking to see the draw on liquidity to be. So zooming down to the 1-minute, I took a pretty fairly early entry, and the reason why is because I didn't wait for a stop rate. I traded the kind of internal model here, but once this ended up getting taken is when the real entry would have been. So the first entry I took was pre-market. I ended up getting scaled. I scaled out at my first PT like a quarter of it, and then I got stopped at break even on the rest. At the 15-second, zooming in here. Now, I ended up taking it off this imbalance. So what I ended up doing is looking at the 5-minute. We had a huge 5-minute fair value gap here. Zooming down to the 1-minute, I was waiting to see displacement outside of this range. Once we got this big move down, we ended up coming back in to this 1-minute fair value gap here. So I ended up zooming into the 15-second to look for an entry. Looking back, this was maybe a little bit early, but again, because there was no bigger time frame stop rate, but it still wasn't bad. We ended up coming back up. I got tapped in short right here when we retraced back into this fair value gap. I put a stop at these highs and then ended up coming up, and then I ended up taking, my target was these lows and then sell side. I ended up taking off a quarter here, and then we ended up coming right back, and I ended up getting stopped at break even. So first trade, again, only a quarter off there, so didn't really make much on there. Got the rest of stopped at break even. So then after this, market ends up opening, and at this point in time, I'm still bearish, right? I'm still expecting to see sell side being met. But what am I watching in price here? At this point in time, I know that most likely we're going to go see a stop rate, right? Meaning we now have a high put in on the 1-minute, right? Notice we create structure, we're creating structure. We put a high in, and then we start accumulating, and then this is when we can have that final stop rate. When we have that last push up, we push up into this 1-minute imbalance, and this is where I would look to start looking for an entry. So again, for me to zoom in here now, this is where the entry that I should have taken, or in my opinion, looking back, when I was first looking at this entry, I would have it was a little bit aggressive, and I was waiting to see it form first for me to look for an entry, but in turn I ended up missing this trade. So we end up waiting again. Internal gets, or we actually form equal highs here. So now I'm waiting for these equal highs to be swept, right? We end up coming back up. Equal highs get taken. And then we get this move to the downside. So this move right here, this is now our manipulation move to the downside here, right? So overlapping models here, right? This is exactly where you want to be. Notice everything is now in our structure. So let's do from right exactly where we are right now in price. Let's zoom out again, right? Okay, 15-minute. What's the bias here? Buy side swept, displacement down. We're now retraced back into discount of this entire range, right? We're now discounted this entire range. So now we're looking for the exact same thing. Hey, zooming in one more time. Internal has now been swept, just like it has off here on the 15-minute. Zoom in even more to the 15-second. Hey, internal's now been swept again, and now getting displacement to the downside out of this range, right? Every single thing is starting to align with what we want to see in price, and this is when you're going to get the best entries possible. So this is where I would have looked to take an entry, looking back, possibly in this fair value gap, and then have, again, low risk opportunity here. Very low risk opportunity. putting a stop at the high, all this move to the downside would have been a really nice entry. I waited and was a little bit more cautious because I wanted to see displacement through this low. So after this, I zoomed out to the 30-second, and once we got this move, I was looking to see this fair value gap. Now, looking back, was I too picky on my entry, or was I like, no, I don't really think so. In my opinion, most of the time, I would get tapped in here. If I actually go down to the 15-second, there was an opportunity, which was right here. This is the fair value gap. Again, this is the only thing looking back that I would have said, this would have been it, right? But at the time, I wasn't looking at the 15-second. I was looking at the 30-second because I was expecting us to come up, 3 or 4 ticks more for me to get tapped in, right? But we end up coming back into this 15-second and then end up selling all the way back off, but I never ended up getting tapped in short. So at this point in time, I'm still kind of looking to see if I can get an opportunity to get tapped in short. But after I really missed my entries down here, and then we're all the way down here, I don't like entering really down here because the risk gets skewed and it's lower probability because we could still bounce up to here and then go back down. So if I don't enter up here, a lot of the times I don't look to take trades down here unless it's, really clear to me and I have good risk. So 15-second there, we have another 15-second fair value gap that ends up getting tapped. So this would have been the second opportunity, the only other opportunity. And at the time, I was actually looking to take a short here. But again, I didn't get tapped again on this trade. I put my limit order like right here at this recent wick low, or this wick low. I was expecting this to get tapped, but we didn't. We came up right here, tapped into this 15-minute fair value gap, and then instantly sold off to the downside to take sell side then, and then ended up coming back up. And then, of course, that external level that we're still watching, this is just the internal sell side. Again, this becomes low resistance liquidity run. We don't expect to sweep this and then just bounce. We expect to go run all of these lows, right? So then we come down, continue to run to the downside. And at this point in time, I'm no longer really looking to short. I'm more waiting for price action to do its thing because the internal model is now finished, right? This is what I had confidence in. I had confidence in this. If I look at the 5-minute, this is exactly what I want to see with my model. You have accumulation, you have a manipulation at the high, sweeping buy side, and I'm targeting sell side. Once sell side's now taken, I'm not waiting for structure, right? I'm not waiting for a completely new model in price, right? And a lot of the times, right when this gets taken, it was, 15 minutes, 30 minutes into the open, and at that point in time, I said, guys, this is probably going to be the best setup. There's probably not going to be any other good setups today. This is the morning model. Sell side's now been swept. Now it's either going to be continuation, we're going to reverse, but anything after this is most likely going to be lower probability because the internal model's already been finished for the day, right? So looking at this, looking back, what did I do right? What did I do wrong? What did I do right? I waited for what I wanted, right? And I didn't sloop on that. I didn't force an entry. I just didn't get tapped into what I wanted, right? That's fine. It happens. Now, what I did do right as well is I'm not FOMOing into something, right? I say this all the time. If I don't get the entry that I want, then I miss the trade, and it's fine. Then I won't take the trade, right? If I don't get the entry I want, right? In the risk that I want. But looking back, the only thing that I would say now it's not that I did wrong, but this is kind of where I should have taken a short right here in this 15-second. At the time, though, I wasn't looking at it. I was paying attention to the 30-second. I was expecting us to, come up 2 more ticks to tap me in there. But it's unfortunate that we didn't. So, again, happens. A lot of you guys did catch this trade, though, after we just displaced. A lot of you guys entered. So I'm glad that a lot of you guys took that trade. But unfortunately, I didn't get tapped in on that. So then, rest of the day, we ended up just continuing to sell off. Let's see if there was maybe any sort of internal models today that you could have taken for the short side. So again, at this point in time, it is lower probability to take shorts now that this sell side has been swept, but you could look to scalp this on a 15-second if you get, again, maybe come up, sweep this high, and then look to displace back lower. Never happens, right? Continuing just to sell off. Have this imbalance here. Possibly look to maybe short this imbalance. This could be a possible short setup. Again, come up, equal highs taken, internal, bigger time frame rejection off that fair value gap, displacement, fair value gap, look to see new lows. That would have been, and that would have gone run as well. Another possible opportunity, internal displacement, fair value gap should see new lows here as well. And again, we don't. After that first trade, this is why I didn't trade the rest of the day on NQ or ES. And then we end up coming back here. So notice something as well here. I'm going to mark in the standard deviation of this move here. If I zoom out to the 15-minute here, what's the manipulation move of these highs getting taken? Right here. Notice where we ended up bouncing today. Beautiful. So we ended up coming all the way back into this 4-hour imbalance, which honestly, I wasn't really expecting us to sell off this hard back in here. But we did. We tapped this, instantly got bought right back up. Now let's see if there was any possible trade here. Again, the only really way I would have taken this. Yeah, again, this action is awful, guys. This action is just absolutely awful. There's no reason that I would want to trade this. And I really would not have been looking to trade it. Maybe this, we didn't even tap into that. This 5-minute, we had a 5-minute inverse. Maybe look to take something here. But again, I still really don't. Okay, this doesn't look too bad, actually. Again, super, super tight action. This is actually right before close, so never mind, but... Yeah, NQ, after that first, again, exactly what I said. After this is done, I'm not really looking to take anything the rest of the day. Because I'm expecting action and not be concise and efficient, right? So let's go over that gold trade that we took. Gold, absolute just disgusting price action today. Absolutely disgusting. Looking at a 5-minute. This is a 5-minute chart. If I go into 1 minute, absolutely awful. Disgusting price action here. Now, gold is still playing out to the draw. It's still playing out to the draw on liquidity, but price is not efficient, right? Notice when I say price is not efficient, it'll still play out to whatever the draw on liquidity is, but not efficiently, right? And the best trades that we want to take are when price is efficient, and that's not when, it's non-farm payroll. And a lot of time, again, and we know gold is the most manipulated thing that you could possibly trade, right? And that's why I stick to ES and NQ most of the time. So the trade that I took here, again, this model looked great. I was looking for, and I probably still am looking to see this, power of 3 here, accumulation. We have all of these relative equal lows down here. We swept this, got big move to the upside. I'm now expecting this fair value gap on the 5-minute to become an inverse fair value gap. So this is what I was looking for. Waiting to see a stop raid. So ended up entering up here and then coming back down. Didn't get stopped here. Added my position up here. Again, stop raid here. When we come up, again, form low resistance liquidity run, all of this, I expect this to get, ran through, which, again, it ends up does. But, again, it's awful. Awful price action. It's not efficient whatsoever. This, to me, we should absolutely run here. Absolutely. Again, low resistance liquidity run. Come down, sweep this. Big displacement back up. Come down. This, after we sweep this, we should run. After we sweep this little intern high, I was looking to see displacement. And then after that, I was like, all right, if we do not run this, then there's no point in not trading gold. So one thing I want you guys to get out of this trade, and something that you can bring into the future, is if there is ever a time where you are looking to take a trade, right? And again, this comes with more of an experience side as well, but I've gone to a point where I have a rule of mine, an undecided rule. It's more of just a mental note. But whenever I take a trade that I'm super confident in, or I really like, and I get stopped on it, right? Or I'm watching the trade, not even if I'm in a position, or I'm watching the trade and it doesn't do what I'm expecting it to do, that means I do not trade it, right? Because I have built up such confidence in the way that I view the market and what I think the draw on liquidity is and where I think the market's going, that when the market doesn't do that, I decide not to trade it, because in my opinion, it's unfavorable market conditions, right? Just because I have built up so much confidence and conviction with how I view the market and the draw on liquidity, that when the market's not doing what I initially thought it was going to do, I'm basically saying, hey, I should not trade today. It's unfavorable market conditions, right? I can't read it, right? So that's what I want you guys to be able to get to. And a lot of the times you'll notice when we trade together, I'm almost every single day spot on with the draw and liquidity, right? Spot on. Now, it's recognizing efficiency and price, though. This is not efficient price action. This is not efficient price action, okay? And you can tell by it, right? Now, even though the draw and liquidity is here, and we'll probably still run this like we are right now, but slowly chopping our way, it's not efficient, which means you don't want to trade something that's efficient, even or not efficient, even if you know what the draw and liquidity is, right? So the rule that I have is if I take a trade and I get stopped, and then the market doesn't do what I expect it to do, I don't look for a re-entry because I know that it's unfavorable market conditions most likely, right? So pretty shitty action on gold today. Ended up getting stopped on that trade, and brought me down on the day. And that's pretty much it. That's the only trade. After this, I was like, all right, not trading the rest of the day, calling it there. I'll take my little loss on the day, get back some profits on the week. Still up on the week from those earlier trades that we took earlier, but gave a little bit back on gold. But again, recognizing it. If I was to stick here and continuously try to re-enter gold and try to catch this move, I would have gotten stopped out 5 fucking times, right? It's being able to step away. Again, the rule is if I'm getting stopped over and over again, or like twice or once even, and I know that the market's not doing what it should be doing right now, because I'm like, guys, gold looks like we want to pump. And when gold doesn't pump, that's a problem, right? Because I just have that much conviction with my trading, right? I have so much conviction that when I think something's going to happen, it should happen. When it doesn't happen, I don't trade, right? Does that make sense? Yeah, PA was poopy across the board today. All right. So let's take a look at some trades that you guys took today. Took this long after it took yesterday's AM low, got stopped, and it rallied after. Shake my head. Again, look at this action here, guys. Again, I would not look to take any sort of trade in the PM, to be honest. It's just, again, how I trade. But if you're going to trade something like this, you have to notice this PA here. If you notice this PA, notice where you enter here. If you are trading choppy action like this, you have to loosen your stop and lower your size. Especially, guys, look at this. If I'm taking any sort of trade here and I'm having a tight stop loss, I'm going to get stopped every single time I enter a trade, right? Every single time I enter a trade here, I'm going to get stopped, right? So it's just recognizing what kind of price action is happening. And if you do want to take a trade, right? If I see this price action, I just don't trade it, right? I just don't trade it. If there's choppy action, I do not trade it. If there's not a clear draw, I do not trade it. But if you are going to trade it, at least you can do, the least thing that you should do to protect yourself is lower your size and loosen your stop, because you're going to get stopped a lot of times when you're just trading this kind of chop. So again, I like the setup's not bad, but I would have never taken this trade. Yes, this looks great, brother. This looks great. Again, SMT. Yeah, we had an SMT with YM and ES, and NQ had a SMT. I totally forgot about that at the time. Came up with the 1 minute. Again, you got that entry that I wanted to get that I didn't end up entering. So beautiful. Again, this is the best setup today. This was the only really good setup. Again, notice efficiency in price, guys. Notice efficiency in price. Right when we come up and sweep equal highs, what happens, right? We have equal highs. Boom. Internal swept. Brrr, literally straight down to sell side. It's literally straight down. There's almost no drawdown right here, right? That is efficiency in price. When there's a clear draw in liquidity, that is what efficiency in price looks like. But after that internal model's taken, the algorithm moves throughout the day, but when this internal model's already finished in the morning, a lot of the times we end up just chopping. Or we don't have any clear and concise action. I don't really know what the trade here was, to be honest. No, I don't like this at all. I hate this action. It's just... No. Yeah, I don't really even see what the model here is, to be honest. Oh, sorry. Let me look at the bigger time frame chart. It's all right, but again, notice this move. This is this move that we were talking about, right? The move that I said I want you guys to focus on looking at on price. Oh wait, let me do this. Notice this formation in price. Right? We've talked about this before. Yes. We've talked about this. You guys have seen this. Yes. Who has seen this before? Who has seen me talk about this formation before? This happens in price, right? Now, this happens in price, and it fakes out all the people that think it's a short model, right? Because when you're looking at this, you're like, oh, buy side swept. I'm going to take a short here, and then we never do, right? But you fail to recognize where we are internal price already, right? When we come down, sweep sell side, come back up, sweep buy side, and then displace, but we never break through whatever previous imbalance we have, a lot of the times we just go back higher. So looking at the trade, notice, chop, 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 big move up, big move down, sweep sell side, big move back up. This entire move gets ran through, right? Just like this thing I just drew here. This, if we have a huge sell-off here, this entire move gets ran through, right? All these imbalances get ran through, right? And notice, this next imbalance to the downside, order flow is never bearish here. Order flow is never bearish. Notice, consequent encroachment does not get closed below this entire time that you're looking to take a short here on a bigger time frame, right? That's just something you have to recognize. Make sense? Yeah, this looks great. This is definitely something I would trade. This is definitely a model I would trade. I think your stop is a little bit too tight. And the only reason I'm saying that is because we didn't even retrace back to discount of this range, right? What I would be looking for in an entry here is, if I get form of this bullish 5-minute rant, they're showing weakness. Oh, okay, never mind. You traded off the BPR. Okay, I can tell there's a BPR there. I was saying I would probably look for at least discount of this range. So if you are going to enter on the BPR, give yourself a little bit more room stop wise, just because you can still run the discount of this range and then sell it back off, right? So that's the only note on here. It's just maybe a little bit looser stop, or you can try this out. If you get stopped, you can just look to re-enter it once we go to discount and then wait for displacement back down. But yeah, again, this is definitely a model I would trade. Where's the entry here? 30 to 15 second model, question mark. Oh, is this, okay, this is a 1 minute. Oh, if you were going to take sell side here, in my opinion, if there is an entry here, which it would be here, somewhere after this initial low is taken. After this initial low is taken and we failed to displace below, it would be here. And then my stop would be somewhere, below this breakaway gap. But I mean, you could look to take a 15-second internal model off this internal sweep. But my original one would be after that first initial stop raid. Can you look at this SPY long got stopped at break even after missing target by a few ticks? Never hit target, took off all here, missed the move. Ooh. Again, isn't that the same? This is the same price action today, huh? Again, it's okay, but a lot of times, guys, I don't trade after that chop. If I see this action, I do not trade. I only trade the first 2 hours of the market, to be honest now. Like let me talk to you guys. If I'm being honest, I really don't like trading PM anymore. I pretty much only trade AM. And I've come to realize that the most efficient moves in the day are the first 2 hours of the market when we trade together. And pre-market. The first 30 minutes and the first 2 hours of market open are the best times to trade. The most volatile, the most efficient in price. Notice, go back and compare this action in the PM session after buy sides are, or after, okay, this is what I want you to, this is your homework. Go into previous days and go to the pre-market session of whatever day you're looking at and look at whatever you think the objective is for the morning. Whatever you think the objective is, meaning what do you think the draw on liquidity is? What current model are we in? What current model is being traded at market open? Now, look at the action during that time. Now, after the morning is over, or whenever the objective is taken, go back and look at the action afterwards. And tell me, and compare the differences in price and compare the differences in efficiency. Because I have come to realize that I am the most profitable, the most consistent, the best I am when I only trade that first draw. That first morning session, that first model, that first whatever I think the objective is. Once the objective is taken, I don't really care to trade anything else until we get completely new structure, right? And that's just the most inconsistent I've ever been, is when I trade just that. Yep, this looks great as well. Yep. I remember you showed this today. Yeah. Great trade as well. That's where I was looking to take a trade again. Didn't get filled there either, unfortunately. Internal 5-minute first. Not bad. Yeah. Did we have, what is this on? NQ? When was this? Oh, this was today after that. Oh, okay. I much rather like this. Okay, I much rather like this than trading the 1 minute today, guys. The action that you guys were showing, this action on NQ on like a 15-second or a 1 minute is awful. But no, wait, it's not even the right chart. Wait, what am I looking at? Wait, what is this? Was that not this? Oh, pre-market. I was like, what the hell? There we go. Okay, yeah. I like this. Yeah. Okay. Yeah, this looks good, because I was confused. I was like, wait, this looks good. I didn't this price action didn't look like it was in the PM. I was like, I thought it was the same time. Yeah, this looks good. Let's talk about this. Yeah. Again, rejection off bigger time frame imbalance. You have this 15-minute, you have this inverse, you have all these things, showing confluence. You have a 15-minute overlaps with the BPR. Perfectly tapped. Again, notice the BPR here. You have a 15-minute inverse, and if I was to draw in the fair value gap, perfectly tap that. Internal swept on a 5-minute, zooming into a 1 minute, internal swept on the 1 minute, equal lows taken, displacement up, pull back to fair value gap, long. First PT would be here, second PT would be that external high. Yeah, that looks great. Great trade. Beautiful. Would you consider a market structure shift on the 1 minute and still have taken this trade hindsight? Yes. I was still looking to take a trade here. I didn't get tapped in. Yeah, this wouldn't have been bad either. Yeah. Model within a higher time frame model in discount of yesterday's rally turtle soup. Retrace a discount entry number 1 on BPR. Scale more on internal 1 minute fair value gap. Let's take a look here. Get the other chart up. SMT 4-hour imbalance. Okay, internal swept. Was this today? Did we have an SMT here? Was this No? Okay, I was like, what is this? What am I looking at on this chart here? Okay. You entered on this. Is this what time is this at? The one you have on now, macro after lunch. Okay, this was ES, I'm guessing. Okay. Again, I probably wouldn't trade this. Too choppy for me. Bigger time frame, there's no imbalance for me to trade off of here. Again, I don't really care if this is like OTE, whatever the range is. I don't care. I need some sort of bigger time frame and balance if I'm going to take a long like this. And especially when these are equal lows here, so. But again, I would say focus on building. If you want to build a model like this, then yes. But I wouldn't look to trade this on a 1 minute just because the action's so poopy. I got stopped out in pre-market, re-entered at 942 for a quick scalp. My target was 1485, and my ESA was above the entry candle. What do you think of this? I only entered this for small size because the move was aggressive already and waited for 1 minute pullback. Let's take a look. Yeah, this looks fine. This looks fine. Yeah, again, exactly. I took the first entry off. I took my other position off too because I knew we were probably going to run and stop rate that. So I took my entry off here at break even because I knew we were going to have this push up. And then the re-entry there. Again, re-entry. Again, today just the market wasn't forgiving with its entries on NQ. I was hoping to get a better entry up here, but we ended up just having that big move down. So I never really got that good entry. But again, not bad. I have a problem every day that I trade. I maybe enter perfectly, but I can't let the trade hit TP or stop loss. When I see a little profit, maybe half, I close. How can I be more chill and let the market do its thing? You're greedy. You're fucking scared and you're greedy. You don't have enough conviction with your trade. You don't have enough conviction with your edge to let your trade go to your price target because you don't know where the market's going. You don't have conviction with it. I do. That's the difference. And what I want you guys to get to the point to. The people that are in here in this Discord and the people who have been building conviction, we know where the market's going. If we have good action and a good setup, we know and have confidence with where the market's going, right? Just like today, I told you in the morning today where the market is going. I told you pre-market. Before the market even opened, I told you where we're going at open, right? I said we're going here. This is sell side. I know this and I have confidence with this because I have back tested it for hundreds of hours and I have traded it for hundreds of hours, right? And I've seen it a lot. So if you're at that stage right now, that's fine, right? If you're at that stage where it's hard for you to, hold or hard for you to let it hit your stop, the main reason is because you don't have enough experience. You don't have enough conviction trading it, right? You don't have enough confidence to hold it because you haven't done it enough. So focus instead of making money and, being greedy, taking it off early, taking the profits, focus on building good habits. Focus on building conviction. So if you have a problem with taking off your trades early, enter a trade, put your stop loss in, put your price target in, and walk away. Don't even look at the chart. Put your stop loss, put your price target, and walk away from the chart. Force yourself to not even look at the chart and make a decision. You should not do anything until your stop loss or your PT is hit. And that's going to force you to wait. Helps me to get off the screen. If you trade a higher time frame, either stop or TP gets hit. I get the notification on my phone and get back to see what happened. Exactly. Love it. Justin, I just want to clarify the gold trade wasn't a bad setup and normally would play out most of the time. Yeah, I didn't think the gold, yeah. Guys, if I take a setup twice, it better not be a fucking bad setup or else I'd kick my own ass, right? I'd kick my own ass because that's terrible habits. I should not revenge trade 2 times of a bad setup, right? So absolutely, I think gold was a great setup today. I just think the action was ass. I think the key isn't getting to a stage where you know where price is going to because you can predict price, but it's because you have conviction in your edge and you let it go needing to know or not know where price is going. You know your edge inside and out, and that gives you conviction regardless of the outcome. You're performing good habits. Absolutely. Exactly. Regardless of what, again, the market will do whatever it wants to do. Even if I go into a market and say, I have 100% confidence that we're going here, it could still not go there, right? The market is going to do whatever it wants. When you start to stop caring about what the market does and stop taking it personally, that is when you'll start to see success. Most of you guys, one thing that I had a problem with when I first started trading is I cared more about being right than I did about actually taking good trades. I cared more about being right. So when I would go into the market and I was like, hey, I think this is going to happen, and it doesn't happen, I fucking get heated. I get tilted and I go on tilt and I take dumb trades, right? Stop caring what the fucking market does and don't take it personally. Don't focus on being right. I don't care if you're fucking right. You can lose money and still be right, and you can make money and be fucking wrong, okay? So it doesn't matter if you're right or wrong. It doesn't matter. Exactly. Conviction is based off of probabilities. That is what an edge is in the market. An edge is all just probability. Yeah, that doesn't look too bad, Mumu. Doesn't look bad. But I would zoom in there and then wait for that displacement back up to enter. Trade one thing well, take the trade, then set your TPSL and literally walk away from the PC. Go touch grass. Yep. If you guys, I'm serious. If you struggle with patience and discipline, and you can't sit in front of this also goes for stress and anxiety. If you enter a trade and you're like already feeling stressed, number one, you're over leveraged. That's the first thing. If you're in a position and you're stressed and you're anxious, a lot of the times it's because you're over leveraged. You have money on the table that you cannot afford to lose. Okay. So, number one, always put money on the table you can afford to lose. Any trade that you take, you should go into every trade expecting to lose. Right when I click sell or right when I click buy, whatever trade I'm entering, I am already being like, I've lost this fucking trade. Like, I've lost this fucking trade. Because when you accept it before it happens, it doesn't affect you, right? That's why you don't get your hopes up. This goes with, honestly, literally anything in life. Like, just like if you think you're gonna, if you already know you're gonna fucking die in life and you just live your life to the fullest, you're no longer afraid of death. If you go into a fucking football tryouts expecting not to get on the team, and you don't get on the team, it's so much easier to deal with that than if you were going into it being like, I'm so good, I'm so much better than these motherfuckers, I'm gonna make the team, and then you don't make the team and you feel like shit and you cry your fucking eyes out. Okay, so when you enter a trade, I fucking have already lost that bitch. And guess what? If I win, that's fantastic. That's great. But hey, that trade's already wiped from my memory and I'm going on to the next one. Confidence is based on the probabilities, not in the ability to predict price, which if that is your goal, you'll go crazy, which is what I did. All right, yeah, let's talk about my bias going into tomorrow. So I won't be trading tomorrow, but let's talk about what I would want to see in price today or tomorrow. All right. So first thing, I like these. Now we did come up and take this, but bigger time frame. I like this equal highs. I would want to see this become buy side. Big displacement down, rejected off that 4 hour, huge move to the upside. What am I expecting? I would want to see this become an inverse. So I'd want to see this hold. We possibly could come into this 15-minute fair value gap here, and I would look to see internal swept. So what I would want to see here is I'd want to see accumulation in the overnight session, manipulation in the morning, and then displacement to the upside. So this is what I would want to see. Chop, chop, chop. Sell side swept, displacement up, continuation to the highs. That's what I'd want to see. Yeah, we can check EU. So Euro. So bias on Euro. Nah, Euro looks iffy. I don't even really like Euro, to be honest, right now. Euro, I'm still bullish for now. Now, bearish on a bigger time frame, but until we get displacement to the downside, I won't be bearish. I'm pretty bullish until we get displacement. We don't really have any sort of like, I guess this is kind of an inverse, but it's not. Yeah, Euro, if I'm looking to trade Euro, I'd be trading the internal model if there is one. Again, if I'm being honest, I haven't really been liking Forex much. ES and NQ are my fucking babies, and especially now that we're in the quarter four, ES and NQ are just so good, and I really only want to trade that. Swear this isn't my only affiliate code, but someone sent me a free month off on TopStep account. Can I share the code? I'm doing the free month and canceling it. If I'm not closing. Yeah, if you have a code that's a free reset, go. I don't know how you have that, but sure. TopStep doing free 150Ks right now for a month. Hold on, let me see. This is our code. Oh, is it only? Oh, at checkout? I'm guessing it's at checkout. Well, I won't go to checkout because it's going to show my shit, and I'm not going to leak my credit card shit again. I'll check it out. So after I end the session, I'll check it out and see if the code works, and if it does, I'll send an alert out and announcements for you guys to go do it if you guys want to. If your external bias is different from your internal bias and bias that you trade, how does that work? I feel like you have a bias, but once it gets to like the internal model 30 to 50 seconds, how do you determine your bias then, especially if it's the opposite of a higher time frame? It's all fractal. So an internal model has to play out before an external model does, right? Because it's slower time frame. So, okay, this is how I want you to think of it, right? So let me read your question again. If your external bias is different from your internal bias, or internal model and bias that you trade, how does that work? I feel like you have a bias, but once it gets to like the internal model, 30 to 50 seconds, how do you determine your bias? Okay, number one, the best trades that you'll take is when your external bias and your internal bias align, right? Which means it's going towards either up or down. If my external bias is up and my internal bias is up, that's great, right? That's going to be automatically a better quality setup, right? If I'm taking longs, right? Now, if it's not, like for example this, right? If actually that's not a good example. Let me think. Hold on. Let me think. Okay. For example, okay. If I'm looking at this internal range today, right? And I go to the 5 minute, and I'm just looking at this, right? This is what I want to focus on. Let me go back in price here, right? If I'm looking at this, okay? All right. So this, it doesn't matter what this is. This does not need to be an external model. It doesn't need to be an internal model. All it is one thing, right? Because again, external and internal is all relative. It all just depends on what time frame you're looking on. So don't get confused, right? So this could be an external model. This could be an internal model. This could be an internal model of this model, right? But this could also be an external model of this model. So it doesn't matter, right? Just focus on what you're looking at the specific time, right? It's all fractal. Once, again, guys, it'll start to click over time. This concept will start to click over time, right? If I'm looking at this price, this specific model that I'm looking at right here, the draw on liquidity is here. Now, I don't know if the draw on liquidity is here or somewhere down here on a bigger time frame if I don't zoom out, right? But I don't really care. I don't really care if the draw is down here on a bigger time frame, right? Because for the draw to be down here on a bigger time frame, I need something else in price for that to validate. But I'm not looking to catch up a move to here, right? This internal model has to complete before continuing down here, right? Because this internal sell side hustle has to get taken first if we want to go down here, right? So if I'm bullish, let's say I'm even bullish. If I think we're going to buy side, this does not mean that this internal model won't play out. Because guess what? If I zoom out and I'm like on a 15-minute, if I think the draw's up here, we still most likely are going to retrace back to discount of this entire range first before going back up like we did today, right? Boom, 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 boom. We sold off back to discount and then got bought right back up. So then that's showing me the draw's higher. But it all is fractal. It all depends on what is happening right now, right? That's why I always say, focus on what's happening right now because it's always going to be different. So if I'm looking at just this internal model right here, I don't really care what the daily or what the 4-hour or what anything is telling me, right? Now, let's say that this is now my external model, right? So this is now my external model. So now I zoom in. I'm zooming into a 1-minute time frame. So hey, this is when I like to look for a trade that's in the same direction, right? Because I'm a scalper. I like to take the 15-minute draw, zoom in, find a similar setup targeting that 15-minute draw with an internal model, right? So what do I wait for? Hey, we're coming back up into this 1-minute imbalance, right? I'm still bearish. What am I now looking for? I get internal sweep liquidity. Again, the exact same thing that I would look for on any time frame. The exact same thing I would look for on any time frame targeting a draw. If I think the draw is lower, what is the best possible trade I could take? Some sort of stop rate in the opposite direction. When I see a high get put in, right? Now, I saw this and ended up taking off my trade here. I was initially in shorts here. I was in shorts right here with a stop here targeting this low. I took a quarter off right here. When we got this big move back up, I knew this is now another internal model. And I know that the internal model on a 15-second is now here. So I'm going to try to slow this down because let me try your best to understand this. I know now that I'm going to get stopped here. So I take my trade off at break even. Why is that? Looking at ES. Another reason why. If I'm looking at ES at this exact same time, right, which was right here, and I go down to the 15-second, what is this? What am I looking at here? What do I see in price here? If I zoom in here, again, price is fractal. If I zoom in here, number one, I think the draw is lower here, but that doesn't mean right this second we're going to go here, right? We can still come up back up here because, again, failing to recognize, hey, we're not in discount of this entire range yet, right? Guess what? We haven't had a stop rate in the opposite direction before selling off, right? There's no stop rate here. There's only one high that's put in here, right? Now, when I zoom in to a 15-second, what does this now become? Notice, we sweep this level. Sell side's now been swept. All of these imbalances get ran through. I zoom out to the 1 minute here and I say, hey guys, if we fail to break through this 1 minute, the draw becomes higher. Again, what's being respected, what's being disrespected. Right when I see ES hold this imbalance, I take my trade off. Why? Because the internal draw now becomes here. I was just in shorts. I don't really care at this specific moment if the draw is here because the trade that I'm specifically in is going to get railed, right? Because the internal model, again, fractal, trades inside of trades, models inside of models, is telling me we're going here. So guess what? I should probably take my trade off because my stop is right here. I'm going to get stopped. So right when I see this, again, bullish order flow, sell side internal swept, we're holding a bullish fair value gap, we get bought right up to here, okay? So that's why I'm able to recognize what price is doing right this second. That's all I'm focusing on, right? So now at this point, hey, guess what? Everything that I wanted to see in price for me to target this low has now happened. I've had a stop rate in price. We're coming up. I want to see a rejection of this imbalance. Now, again, guess what? The exact same thing. The best possible trade you could take. Why? Because you get a stop rate in the opposite direction and you get a trade targeting the external draw because the external draw is aligned with the internal draw, right? Look, 15-second. I'm going to tell you to look at this. I don't even care what time frame you think this fucking trade is on. If I'm going to give you this trade, if I'm going to give you this chart right here, what do you think the draw and liquidity is? This low. Why? Equal highs, buy side swept, displacement back inside the range, the draw becomes this low. Hey, guess what? The draw is lower on a 15-second. Guess what? The draw is also lower on a 1 minute because we just rejected a 1 minute fair value gap. Hey, guess what? The draw is also lower on a 15-minute fair value gap. It's this low right here. Boom. That's an A+ setup. Every single fucking thing is aligning with each other. Same directional bias. Mind explosion. Right? Understand? Been profitable ever since I started listening to Deftones. Love to hear it. Love to hear it. Yeah, yes, Justin. They nod in unison. I'll check the code. All right, guys. That is all I have for you guys tonight. Enjoy the rest of your night. Great session tonight. Damn, we've been going for probably another hour or so, but I will not be trading tomorrow. Stay safe. If you are trading, please be careful. I will see you guys all on Sunday. So enjoy your 4-day weekend, or actually Monday. I'll see you guys on Monday because markets are closed on Monday. It's a bank holiday, so we won't be trading. So I will see you guys Monday night. So enjoy your 4-day weekend. Be a little bit of time. Please don't miss me too much. I'm going to miss you guys a lot. But I will see you guys on Monday night for a charting session to get ready on Tuesday. So if you are trading tomorrow, please do be careful. Lower your size. And I'll see you guys then. So enjoy the rest of your night, guys. Peace.